When iRobot was released in 2004, it was viewed as pure science fiction. But the rise of the robot, and moreover robotics, is rapidly becoming reality and therefore an important trend for fund managers. And over the past 12 months, flows into robotic ETFs and indeed mutual funds have accelerated significantly. Rob Powell is from BlackRock and is with us now. I mean, the rise is tremendous, isn't it, in terms of what we've seen so far into robotics?
Yeah, so when we look at the robotics universe globally, so both ETFs and mutual funds, we've seen that universe size double over the last 12 months. So 12 months ago it was about $4.2 billion. It's now up at about $8.7 billion in aggregate across all of the products.
And do you see that continue? I mean, if we look at the rise of the cars, the hotels run by robots, I mean, you can only think it can continue.
So there's no reason why it can't continue. I think one of the key drivers is potentially the amount of news flow around the theme. For example, we see a significant amount of column space dedicated to automation and robotics as a theme. We regularly hear about companies replacing large amounts of their workforce for robots. So for example, Amazon have 45,000 robots that work in their warehouses alongside human beings. So the trend is everywhere and we hear about it all the time, and that could be one of the drivers of this growth.
Yeah, a report by the IFR 2016 it really showed, I suppose, highlighted how many robots they have in stock at the moment in terms of industrial robots. And just looking at that upward trend says it all really, doesn't it?
Absolutely. So we've seen this long-term move towards usage of robotics in industry, and that's at the same time as manufacturing jobs, or the availability of manufacturing jobs in the Western world, going down. So you might say that many of those jobs in the Western world have actually moved to the emerging markets and to China in particular. But when we look at wage inflation in countries like China, we've actually seen the average manufacturing wage triple over the last 10 years in China. So as the cost to produce these robots goes down, their efficiency of usage within industry goes up, there's no reason why the trend can't continue to go on.
Which is why I suppose a number of articles I was reading today specifically ahead of this interview, they were all talking about how robotics is a better long-term investment than the likes of property, than the likes of finance, for those very reasons.
Well, it is certainly an area within investment markets that is growing. So when we look at the returns of robotics indices over the last 12 months, we're looking at 30+ percent in terms of total return, and that compares to a broad market return of around 15. So you can see that this is very much has been a growing theme over the recent past.
If we're looking at those percentages, I mean, when we say it can continue, will it continue at those rates, or are we like to see with many things where you kind of see a severe uptrend and then, trading through a range for a while and then it picks up again, or do you think it will continue at this rate?
So these thematic indices and these themes that we're talking about, such as robotics, are very much long-term trends. So you're likely to see some level of volatility or more volatility than in a broad market, an MSCI ACWI type exposure, for example, than you are in a robotics or a more concentrated thematic exposure. So we are positive on the long-term growth potential of the theme, but that's not to say that there might not be short-term volatility.
And when you're looking at the companies within that robotic ETF, and is there a particular region where that there's growing more than other areas?
So if we look at the countries in which there's a higher proportion of robots to workers within industry, you see higher proportions within countries such as South Korea, such as Japan, such as Germany, so countries that are exporting, that have a large manufacturing portion of their economy. So I would say that the areas within robotics indices that have more exposure are these types of countries. So think more in Japan than broad indices, and maybe slightly less in the US as a result. So overweight Japan, underweight US is broadly how the positioning goes within these types of exposures.
Interestingly, at the moment is the UK, because there's talk that the Brexit will have a detrimental effect on the uptake of industrial robots from the UK.
So there is obviously the industrial robotics angle within these types of exposures, which may come under pressure if exports are hit but due to Brexit. However, there's also a lot more to robotics exposures than just, or robotics companies than just the companies that are making industrial robots. So if you think about companies that are developing chips or that help in the processing power, that power robots, or companies that are developing sensors that help robots to see, there's many more facets to capture within the robotics theme, which may be less affected by Brexit than just the purely industrial robotics areas.
Okay. Got to leave it there, but thanks very much, Rob Powell there from BlackRock on the rise of the robots and indeed robotics within your funds.